Okay, here we are, end of another bullish day, and just want to share some thoughts and reflections with you. First, if you jumped into a time machine 6 months ago, and so what would that be? So today is May 18, so around about December 18 would be right about there, let's be precise. All right, that was the Sunday, so we'll call it December 19. So December 19, market was around 3,900 on the ES. And if a magical time traveler went back 6 months ago and told you what the state of the world would be on this very day, they would say that 3 of the 5 largest bank failures in history take place in those 6 months, that the Fed has made it absolutely clear that they're nowhere close to their 2% inflation target, and they're going to keep rates high until they get it. And the country was days away from running out of cash unless the Democrats and Republicans hammer out some kind of compromise deal. If all those things had been stated, you would very rightly suppose, gee, the ES must be like at 3,200. But instead it's at 4,200. And the past 2 days, nominally speaking, they haven't been like historic, amazing. It's not like the ES is up 500 points, but it sure feels like it. The past 2 days have really put the zap on my head, and I have pulled radically back on risk, as I mentioned offhandedly and probably foolishly in the comment section. How I'm always talking about, like, I'm in 33% cash and all this. Well, not anymore, because it's out. I'm not even going to allow it to be part of this market anymore. So if I mention I have 0% cash, it ain't because I've gone all in. It's because the cash ain't there. I just don't want to expose it to this kind of madness anymore, which you can take as a great bearish sign. Who knows? But and the thing is that we haven't broken anything yet. Where are we now on the ES? We're the same place we were. We're lower than June of last year. We're well lower than August of last year, and we're roughly at the same price points that we were here and here and here, and then here. So it's not like, oh my God, but it's really discouraging. And the thing is that if this momentum keeps up, let's say tomorrow morning it's like, we've bumped the debt ceiling up $2 trillion. And that causes everybody to get excited. This pattern here terrifies me because, this could just go flying. And we could see this roar to like 4,500 or something like that without even breaking a sweat. So between my complete frustration with what this market feels like and the prospect of this pattern expressing itself to the upside in a big way, that causes me just to my blood turns icy cold. And so yeah, the cash is out of the picture, and I'm happy to stick with the positions I've got, modest though they may be. Just to restate that, I have kind of lost track. It's been so crazy lately, but I've got, I believe, a total of 18 positions, I think. Could be 17. And as usual, they are rather conservative options. They are deep in the money and have lots of time left. So, that's kind of saved me because, if you went like really bearish in this market with, short dated options, you'd be killed at this point. So, a day like today, I'm probably down like 4% and not 40. Because these are quite conservative options. But my zeal for this market, my interest in this market, it kind of looks like the VIX right now. It's just been absolutely wiped. And I say foolishly because, I'm in the content creation business. I create content and tools for traders. And if I am going on and on about, I hate this market, I don't want to participate, I'm out of here, it doesn't exactly, it's not a huge endorsement for trading, but I'm known for my earnest nature and being honest and open. And sorry, that's, I'm going to tell you the truth. And some of you may brilliantly use my emotions as a contraindicator. That's probably a great way to make a fortune. because if I'm high as a kite about the market, it's probably a great time to get out of bearish positions. The VIX itself is just about to crack into 15. We're at 16.05. We're approaching levels rarely seen. This is a weekly chart. This is all the data that's there on the weekly chart. And as you can see, we're just plumbing the depths. I suppose if you go back to the very, very lowest levels of last June, it got down to as low as 14.1. But boy, oh boy, are we getting there in a big hurry. It is hard to believe that as recently as March 13, we had a 30.80. We were double this just about on the VIX. So the life has been absolutely squeezed out of this damned thing. The big leader, of course, tech. You know, if you want a feeble, thin ray of hope, or at least something to like watch for, I would say that this looming retracement is worth it. It's incredible because you would not even have to have, I mean, you can see what this weekly bar looks like. Let's change this to a daily. Well, gosh, no, we can't see it if we do that, so there's not enough. But it would not take too much more to tag that level. But we are at prices that you have to go back 13 months to see prices like this. And so we have had essentially almost like a 35% rally in the past 7 or 8 months. And Nvidia is up about 200%. So we're back to the madness. You know, we're back to 2020 and 2021. We're back to the insanity where giant stocks can happily have triple-digit gains in a matter of months. It's all back. It's all back. Anything else I can gripe about? Let's see. Regarding crude oil, it's not really been participating. My energy bearish positions remain. But you know, I'm not, you know, it's just crude oil. This is just energy. It's not gonna be anything completely transformative because equities don't really care too much about that. But you know, at least oil's not $300 a barrel. So on that rotten note, I will just say that you know, I'm still in position, and these are options that expire anywhere from I don't even think I have August's anymore. I think basically September's through January's, and deep in the money. And so if there's one thing I want to see now, oddly, it's a debt ceiling deal. Just get this damn thing out of the way. Let us see the result and have the exuberance behind us, and then we can move from there. As it is now, this debt ceiling, you know, binary event is very worrisome and a real obstacle, I think, to clear-headed thinking about this market. So that's a component of why I got the hell out of the cash that I had left. I hope you're doing better, and I appreciate your time and attention, and I hope this is in some way helpful. Bye.